Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD got a boost from the positive Trump's comments on China late Tuesday. We saw the bullish momentum holding yesterday, but it started to wane as disappointing news started to filter through. We see stronger reaction to positive news because of overstretched positioning, so that will likely continue to be the case, even though in the medium term the US dollar should keep on depreciating as the path of least resistance for the Fed remains to cut rates. On the JPY side, the currency has been driven mainly by global events rather than domestic fundamentals. Alongside the Swiss franc, it's been the favored safe haven in the currency space and will likely continue to do so. The negative impact on the Japanese economy from tariffs uncertainty and the downward pressure on inflation from the surging yen will keep the BOJ on the sidelines for the time being. Now the daily chart. We can see the USD JPY bounced from the key 140 handle and pulled all the way back to the 143.50 level. From a risk management perspective, the sellers will have a better risk-reward setup around this major trend line to position for further downside, while the buyers will look for a break higher to increase the bullish bets into the 151 handle next. On the 4-hour chart, we can see that we have a strong resistance zone around the 144 handle, where we can find the confluence of the previous swing levels and this minor trend line. The sellers will likely pile in around these levels with a defined risk above the trend line to position for a break below the 140 handle. The buyers, on the other hand, will want to see the price breaking higher to position for to increase the bullish bets into this major trend line next. On the 1 hour chart, we can see that we have this minor upward trend line defining the bullish momentum on this time frame. The buyers will likely lean on the trend line to keep pushing into new highs, while the sellers will look for a break lower to increase the bearish bets into new lows. These red lines define the average daily range for today. For the upcoming catalysts, today we get the latest US jobless claims figures, while tomorrow we conclude the week with the Tokyo CPI. As a reminder, though, the market is focused on tariff related news at the moment, so the data is not as market moving as it used to be in the past months. The US jobless claims could move the market, though, if we get a spike above the 260K level.